Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back everyone. This is the week I've been waiting for, the time window I've been waiting for. I hope by now you can see it won't be anything Adam Aron or this particular management team does that will lead to a victory for us AMC shareholders. These people are there to bleed every penny they can from the company and will do absolutely nothing that will intentionally hurt the interests of Wall Street. And it's for one good reason. They are Wall Street. It's that simple. There's no need to debate it. Just look at our stock price. You can't debate it. Now, let's discuss what can help us win, and that's a crisis in the leverage chains of our enemies who are levered up to 60 to 1 or higher. Monday, March 11th, the Fed Reserve Board will end the Bank Term Funding Program. Tuesday, March 12th, we'll get a look at CPI. Thursday, March 14th, PPI, but also U.S. retail sales and initial jobless claims. Friday, March 15th, my favorite, triple witching expiration day. The first one of the year. Will also see consumer sentiment. Okay, and then next week on Tuesday and Wednesday, March 19th and 20th, is the FOMC meeting. I understand there's going to be a focus shift to balance sheet runoff and, of course, a rate decision. Now, let's review the swans that could land in the middle of this mess and cause a problem for our enemies that they can't fix. So, Uncle Frank, why are you so excited about this triple witching event on Friday? Well, guys, it caps off a wild week of economic announcements, any one of which could cause a hard shift in the market. I'm also interested because there are nearly 260,000 out-of-the-money calls expiring that day. It's been elevated for weeks, so I'm not the only one that's anticipating some action by then. Not investment advice or advisor. Now, if there is a rally, be prepared for Adam to shit on it with some more dilution at near record low prices again to protect the interests of Wall Street. Or we may even see the limit up, limit down committee come back in again to hamper any significant upside rally. Of course, thanks to Ape being converted into AMC Common, there will be millions of shares available to lend and short and at bargain rates under 1%. So, Uncle Frank, if the market is this rigged and even elements of AMC management are helping them, why do you monitor these indicators? Well, I still believe that if there is a crisis, we will see movement in the things that hedges or Wall Street can't control or conceal. So I'm going to continue to monitor options, open interest, shares available to lend and short, cost to borrow, and days to cover. Even the fake interest number is worth watching at this point. Hey, now here's something Adam Aron and Sean Goodman, our CFO, didn't mention during our earnings call. From DataLend, securities lending revenue in 2023 reached a modern record of $10.7 billion, up 8.6% in 2022. Now get this, AMC stock generated $511 million in revenue for lenders, most of any security globally. Not Tesla, not Apple, not Exxon, not Nvidia. A little theater stock in Kansas generated more securities lending revenue than any other stock on the planet. I think someone at AMC Management should have mentioned this unusual milestone, don't you? Well, at least our CEO is the highest paid CEO in Kansas, earning nearly 4 times as much as the CEO of Cinemark. And we already know how Adam feels about the possibility that synthetic shares exist. Remember this old classic tweet? Candidly, I've seen no evidence so-called fake or synthetic shares exist. But many of you disagree. This preferred equity dividend goes only to company-issued shares. So it'll have the impact of a share count or unique dividend many of you have sought. Hashtag today we pounce. Is that what we got from Ape? But what did Wall Street get out of it, Adam? And we don't get any of those clever hashtags anymore from you, do we? I can't remember the last time this fat pervert even mentioned the apes by name. And for those of you that are deaf, dumb, and blind and think I'm a shill, I was bottom fishing on Friday, were you? There's my best fill for the day, 431. So blow it out your backside, chumps. So recently, Really Bad Person posted this on Twitter. Hashtag Dune 2 haul gave away 2 bags to strangers just to give them a taste of the future. And he shows all the candy that he bought, AMC branded candy, right? Hashtag AMC, this is how you pay down debt. The dividend is $150 closer than it was 30 minutes ago. We'll see Dune 2 a third time for sure. Now, I think this guy is a great supporter of our business, as I am. My problem is his faith in this management team. So first, the company hasn't even hinted they plan to pay a dividend yet, right? We have over $4 billion in debt coming due in 2 years or less. We also owe back rent. Okay, companies that owe back rent typically don't pay dividends or do share buybacks, right? But Really Bad Person says, we're going to get a dividend. And apes love to hear that because then anyone short would also have to pay the dividend. And of course, this would cause a MOAS according to these types of apes. What amazes me the most about guys like this, they never seem to learn that the same guys that planned the ape, its conversion, and all the dilution at record low prices are the same guys that also planned the reverse split we never needed to do, but Wall Street desperately needed us to do. And these are the same guys that will plan any new dividend we may get. Any dividend will be planned by our chief investment banker, Derek Van Zant from Citi, who is a frequent short seller of AMC. It'll be signed off on by Adam Aron, formerly of Apollo, for 9 years. And our CFO, Sean Goodman, for mergers and acquisitions at Morgan Stanley. And, of course, the leader of our board of directors, Phil Lader, who still works for Morgan Stanley Institutional Trading. This dividend will be planned by Wall Street and may even benefit Wall Street, just like the ape did, which was also structured as a dividend in our very own boardroom by Wall Street guys, okay? We will telegraph it, and it will certainly not come as a surprise to our enemies, I promise. How can you be so sure? Because our enemies run the company and sit in our boardroom. Let's instead focus on the things that can hurt our enemies, like swan events. So, how's the commercial real estate crisis playing out? Looks like it's turning into a bank crisis now. From Reuters, U.S. banks far more exposed than Europeans to property crunch, says Morgan Stanley. And from Fortune, top real estate mogul warns 500 or more banks will either fail or be consolidated over the next 2 years. So, Uncle Frank, which banks should we be watching now? A timely question. Here are the ones that are currently on the hot seat. You got Cullen Frost Bankers, Synovus Financial, M&T Bank, and Citizens Financial Group. So when the pandemic struck the United States and AMC theaters, Ken Griffin and parasites like him tried to profit from the misery of the pandemic by collectively shorting the 100-year-old American company into the ground so he could buy, another $100 million painting. By the way, Adam's company, Apollo, was in there shorting the debt of shopping malls too. But now, all of a sudden, Kenny is a white knight trying to save New York Community Bancorp. Here's a headline. New York Community Bancorp shares recover after Steve Mnuchin, Ken Griffin, come to the rescue. From the article, struggling lender New York Community Bancorp will receive a fresh $1 billion infusion of cash as part of a rescue package from investors, including former Treasury Secretary Steve Mnuchin, capping a wild day in which the stock price tanked by some 40% before recovering prior to the closing bell. NYCB share price closed up 7.5% at $3.46 after it was announced that Mnuchin would take a seat on the bank's board of directors. Mnuchin's Liberty Strategic Capital and Ken Griffin's Citadel Global Equities are among the hedge funds and private equity firms that are taking part in the capital investment, according to a press release issued by the bank. Well, guys, you can probably guess where I stand on this. I will root for this bank to collapse and sincerely hope every customer removes their money before it implodes. And on topic, customers are pulling their cash from NYCB, but it's no bank run. You see, that's the financial media to the rescue. Customers of New York Community Bank pulled $6 billion worth of deposits between February 5th and March 5th, leaving the bank's deposit base 7% lower at $77 billion. However, the pattern is not indicative of a bank run, which these days can drain a lender of funds in mere hours. Shortly ahead of its demise, depositors at Silicon Valley Bank tried withdrawing $42 billion in one day over fears they wouldn't be able to access their funds if the bank failed. Maybe we should learn how to trade like Kenny, convince everyone to short the bank stock, plant negative articles in the press. I wish we could naked short the stock. Spoof it while it's trading. Mark our short trades as longs to hide our position. I think I'll go to the chat room and bash the company mercilessly. Oh, that's right. The SEC would never permit that. Only Kenny and people like him are allowed to do those kind of activities. So let's keep things straight here. Steve Mnuchin, who was Treasury Secretary, is investing in New York City Community Bank with Kenny Griffin, who wants to be Treasury Secretary, presumably to keep himself out of jail. And Kenny gave current Treasury Secretary Janet No-Tellin Yellen $800,000 for a couple of Zoom calls when she was in between jobs. But Goldman Sachs goober Gary Gensler wants that job too, but Joe Biden's performance as president may have put a nail in that coffin. Just keeping everything in order over here. So, Uncle Frank, what are you rooting for during next week's action? Well, guys, this is from today, only hours ago. Billionaire investor Ken Griffin's biggest Citadel Advisors stock positions are 5 brilliant artificial intelligence stocks. And from the Motley Fool, billionaire Ken Griffin owns every single one of the Magnificent 7 stocks. Should you? Okay, so we now know Kenny is long tech, especially AI. He's long that shit bank in New York. So Uncle Frank is hoping for a catastrophic sell-off in tech. If CPI and or PPI come in hot next week, that would delay the rate cuts everyone has already priced in. That's right, Uncle Frank is hoping for a bloodbath in the market. Bank failures, black swans, bond defaults, cats living with dogs, in a word, anarchy. But Uncle Frank, where are you getting all this from? Well, guys, the head of the Fed Reserve, for one. Here's a headline from Homeward How. Bank failures are coming, according to Fed Chair Jerome Powell. From the article on Thursday, Jay Powell, who is the chairperson of the Fed Reserve, said that small and medium-sized banks were most at risk. All of a sudden, this guy's being really honest, right? He said, it's not a first-order issue for any of the very large banks. We're working with them. Powell went on to say that this is a problem we'll be working on for years more. He also said that he believes that the issues, troubling as they are still manageable. It's for that reason he wants to get out ahead of the problem. Well, I know I feel better. This is the Nimrod that said inflation was transitory. That $9 medium-sized milkshake I bought from Dunkin' Donuts tells me different. Hey, look, guys, another Evergrande, and just in time for our time window. From Reuters, bond trustee becomes new petitioner to liquidate China developer Kaiza. From the article, A Hong Kong court adjourned a hearing to liquidate Chinese property developer Kaiser Group to April 29th after a bond trustee, instructed by a major group of dollar bondholders, replaced the original petitioner. Shenzhen-based Kaiser has been working on a debt restructuring for 2 years after defaulting its $12 billion to offshore debt in late 2021. Kaiser is China's second largest issuer of offshore debt among developers after China Evergrande Group, and was the first Chinese property developer to default on its dollar bonds in 2015. Many Chinese developers, including giant Country Garden, are facing widening up petitions filed after the sector plunged into a debt crisis in 2021, resulting in numerous firms defaulting on their debt obligations. Evergrande was ordered to liquidate by the Hong Kong High Court in January. Kaiser said in a filing on Friday that Citicorp International, the substituting petitioner, would file a re-amended petition against the company in relation to the non-payment of the 2023 notes with an outstanding principal of $750 million. So guys, AMC's very own investment banker, Citi, is first in line to get pulverized in this liquidation. Let's hope Citi gets the worst of it, shall we? Now, I'm not an investment advisor, and this is not investment advice, but I'm starting to see a pretty strong trade setup here for a big correction, possibly. From Reuters, global markets, stocks at record highs. Treasury yields fall after U.S. payrolls. From the article, investors stretched record-breaking stock rallies on Friday before Wall Street took profits, while U.S. Treasury yields dipped after a not-too-hot, not-too-cold U.S. jobs data reinforced the conviction that the Fed Reserve will begin easing by mid-year. Two U.S. stock indexes initially rallied into new territory after the Labor Department said U.S. job growth accelerated in February, even as the unemployment rate jumped and wage gains moderated. The mixed report kept on the table an anticipated interest rate cut in June by the Fed. Bitcoin also popped to a record high after a 3-day breather since setting its last one, briefly topping 70,000 for the first time. With the widely anticipated payrolls number out of the way, attention immediately turned to next Tuesday's U.S. Consumer Price Index inflation report. Central bankers from the United States and Europe have this week raised expectations that cuts in borrowing costs will begin in the summer on both sides of the Atlantic, pushing stock indexes to new highs again on Friday. Some traders even bet on a May cut by the Fed after U.S. employers added a surprisingly robust 275,000 jobs last month, even while figures for prior months were revised down to show fewer job gains. The immediate takeaway is the focus on the unemployment rate going from 3.7% to 3.9%, said Robert Pavlik, senior portfolio manager at Dakota Wealth. Quote, more unemployment rate implies that the economy is slowing, which in the market's view hopefully necessitate a rate cut sooner rather than later. MSCI's gauge of stocks across the globe rose to its highest level ever, then eased off. It was off 0.09%. The dollar headed for its sharpest weekly drop of the year on the growing likelihood of lower borrowing costs. Spot gold also logged another record and added 0.74% to 2,175.05 an ounce. U.S. gold futures gained 0.92% to 2177.80 an ounce. If everything is so wonderful, why is gold banging out all-time new highs, right? Buckle up, buttercups. This could be a very hot week. This is a powder keg. Meanwhile, at the theaters, Dune 2 is doing its thing at the global box office. You'd never know it by AMC's Investor Relations Department because John Merriweather lost his tongue in a freak accident licking Adam Aaron's rectum for more stock bonuses. From Collider, Dune 2 domestic box office passes Dune 1's lifetime haul. According to the article, Dune Part 2 has surpassed its predecessor at the box office with 111 million in the US in just 1 week. Despite challenges, the sequel is on track to reach 600 million globally, showcasing its massive success. But the theaters are dead, right? And here's an interesting trend in retail banking from the Daily Mail. Wells Fargo, B of A, and PNC among U.S. banks to close 222 branches in just 2 months this year, setting America on course for a grim total of 1,300 branches by the end of 2024. I'm pleased to see short seller of AMC, Bank of America, topping the list at 41 so far. All right, so now we know what Uncle Frank thinks, but what does Wall Street want us to think? Well, they're saying there's no chance this could be a market bubble, right? From Yahoo Finance, the morning brief. 5 key stories. A surge to record highs doesn't a market bubble make. Stocks stumbled to cap the week, but a record close Thursday, and spasms of investor enthusiasm in Bitcoin, artificial intelligence plays, and beyond keep the notion of a stock market bubble top of mind. Still, many on Wall Street find plenty of historical reasons to talk investors down from these fears. Quote, "Our view is that this is not a bubble, and the simplest explanation is that prices and the valuations of these mega cap stocks, whether you're calling them the Mag 7 or others, have really been driven by a combination of superior growth and strong balance sheets, and both of those qualities historically have warranted premium valuations," Goldman analyst Ben Snyder told Yahoo Finance. But I wonder, why didn't Ben mention that it's never really a good thing when only a handful of stocks hold up the entire market? Well, this said 5 key stories that we should read. All the way at the bottom, they hid this one. Big banks are getting their way in Washington. A year after a crisis roiled the regional banking sector, rules meant to rein in banks, namely capital requirements that force firms to set aside more money for a rainy day, are getting a rethink. And just in time for another regional bank scramble to raise cash. Well, guys, are they reining in the banks? No. And Wall Street wants you to think this ain't a bubble. In conclusion, what I'm looking for here, guys, is a perfect storm for our hedgy friends. I want the market to correct if they're long. This was from 2 days ago. Hedge funds snap up stocks at fastest pace in 11 months, Goldman says. I want the government to start cracking down on them for their leverage. Ken Griffin warns against hedge fund clampdown. Okay, I want more redemptions. I want more companies and rich individuals redeeming money from them. Investors yank over $100 billion from hedge funds in 2023. And I want the new money, also known as inflows, to dry up, choking them out from Financial Times. Alternative investments lose steam as fundraising slows down. That's the ticket. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.